In this video, we'll cover structure and bias and why these are the third and fourth most important things that you need to have in your mind as you're trading. In fact, I'd say structure and bias will drive just about every trading decision that you make, whether or not you're looking to stay in a trade, you're looking to enter a trade, you're looking to maybe move up your stop loss, or you're looking at a chart and saying, should I put an alert somewhere based on where structure is at, where structure will break down, or where structure will stay intact. I'll go into detail about what structure and bias is and why it's really important, and I'll really cover some examples here. One thing I'll say is that I didn't realize that this was an edge or that this is a critical component to any trading system until I started talking with some successful traders and really getting some really successful mentors that I was interacting with. And I realized that I naturally look at markets that I trade in this structure way, and I don't know where I picked it up, but most successful traders look at the market this way because it's critical, because it is the story of the market. And we'll get into this in a second here about what this means and what structure and bias is. But whenever you're trading, you need to be able to divorce yourself from the here and now of your positions and where you're at, and understand the environment that you're in so that you can make a clear-headed decision on what you should do. And understanding the structure and bias, you should have understood that anyways before you even got into the trade. But understanding that at a moments by moments notice is critical to making those decisions. Another thing I'll say is about crypto. Crypto is hard to trade because it's volatile. It's also a good training ground for trading because it's so volatile. Because with crypto, you have to have the ability to understand a change in structure and bias quickly, because the change in bias and structure changes with the volatility of crypto in a really quick manner. The other reason for this, or one of the reasons for this, is because the market participants of crypto are a little bit different than something like forex or oil or gold, stocks. The participants that trade crypto are more on the emotional side. And it's not as, and I know I'm not giving examples, and we're not diving into stuff here, but here's the thing to keep in mind. With crypto, and we're looking at Dash BTC right now. There's a use case for Dash in some aspects. Many of the crypto things that you trade, there isn't full use cases yet, and they're not comparable to a stock, and they're not comparable to forex. And if I use forex, and if you're not familiar with forex, it's fine. You don't need to be familiar with it. There's just one thing you just need to know, is that there are, if we look at here, the Australian dollar against, or the AUD, the Australian dollar against the US dollar. If we just look at this pair here, the market participants that make up who trade this are different than a crypto market. And you have people that have to buy certain blocks or have to sell certain blocks of this asset every single day. So there's a different market makeup and a different sentiment, structure, and bias that exists in these markets comparatively to something like a crypto market. And I know that's a high-level concept, but I want you to keep that in your mind as we kind of move forward here. So let's talk about the first important thing that's most important on a chart. And the most important thing on a chart is price. That's the most important thing. And I'm not going to get into bid versus ask and spread, but let's just say the price. The mid price is the most important thing on a chart. And the reason for that is because if you want to buy this asset or sell this asset, that's what you're going to get. So that's the most important thing. And I could probably go on for another half hour and talk about why that is and why you need to think that way, but I won't derail this video. The next important thing is volume. So here is volume. And this is only important because it validates price. So the most important thing is this price right here, and where it's been and where it's going, where it might be going. And then the next important thing is volume, because this validates the price and it validates what you see here. Now, it also can be something that it's more of an art and science thing, because it doesn't always correlate 100% as with anything else in trading. But what is most important is the price. You can't argue with the price. That's the price. Another thing I'll throw in here before we jump into the structure and bias talk is that you should never say that this is too expensive or this is too cheap. It needs to turn around here. It needs to actually bounce from here. If you are saying things like that, you are putting your interpretation of what price should be on the market, and you never want to argue with the market. The market is saying right now that we're looking at Dash BTC on the daily time frame, that 27,003, this is the price of Dash right now against Bitcoin. That's what the market is telling us. So I can argue and I can say it should be more expensive, it should be cheaper. The market is saying this is what it's worth. Now the market will reveal whether or not it should be cheaper or more expensive if the participants feel that it should be cheaper and more expensive. But you should never say that. You should never look at a chart or look at an asset and say that it's way too expensive or it's way too cheap, because this will come down to actual, what we're going to talk about here, which is structure and bias. So I probably should say bias and structure, because bias is actually the challenge is that bias doesn't come without structure, but bias is actually the first way that you think about it. So let's jump into that, and let's just dive in, and I'll talk about what bias is. So as you start your trading day, and your system, your trading system, should have bias and structure into it. And I'm excited that it's summer is, if you're watching this video at a later date, summer is ended now, so we're moving into September. So now I'm going to be adding a lot new training videos to my training that are going to cover this structure and bias and correlate everything else I've created so far. So if we look at the structure right here, we're looking at Dash on the daily time frame. What is the bias what is the direction? Since this high right here, since this high, what has been the bias of the market? And hopefully you've said the bias, the direction is a bear move. Now, was there opportunities to swing trade this during this bear move? Yes. And that's what we'll be talking about, is how to identify these structure differences and these bias differences. But when you're starting your trading day, when you're looking to trade something, you need to have a bias of what the direction is of the market. What is the bias of this market? And if I were to trade here, we move this over right here. My bias at this point in time would be, just looking at the chart from here, is that there is a bear bias in the market, meaning that there's a bias towards the downtrend. There isn't buyers stepping up every downtrend and moving this market higher. We're seeing, if I just take this very simply here, there is a lower low every day. So every day is closing lower. Now here, there was a turnaround, but it did not close higher than this structure here. And I'm not going to get into the structure talk or the support and resistance talk here. I'm just going to talk right now at a high level. So when you start your trading day, when you're looking to trade something, the first thing that you need to identify is what is the bias. Is there a long bias? Is there a bullish bias? Is there a bearish bias? Now, I'll talk about some indicators you can use here, but right now you should be able to identify without throwing an indicator on, without anything else, what is the bias within the market. You could just draw a simple channel. There's a couple other ways you could do this. You could just draw a simple channel here and just say, well, here's a channel that I'm going to draw. And this is a simple, we just do this. This is a simple channel of a bear bias, right? Or we'll use the highs. So we'll use the highs here. We could use the closes. We use the closes. I think you'll start noticing something right away if we just draw a simple channel, and I just have these as the closes. It's not perfect. One thing we notice is that the structure of the market changed here. So see how I'm advancing the conversation a little bit here. But the bias of the market changed here. And it changed here on this big move up here. And as we look at price action here, this is actually a good example because this is a real-time example. And oftentimes in these videos or other videos you might watch, many people are showing historical charts and saying, here's this, here's that. Right now, we're seeing Dash hit a point where you have to make a decision of whether or not the structure is holding up, whether or not the structure of this asset has turned. Has the structure turned? Let's go to the lower time frame. One thing I'll mention too, and I'm diving into the structure talk, and I'm just kind of easing into it, because structure is the story of where that asset has been, and it's the collective memory of what might continue. And the structure, the bias on a higher time frame, plays a role into the lower time frame. So the structure and the bias that's happening on the daily time frame has a snowball effect on the 4-hour time frame. The 4-hour time frame has a snowball effect on the 2-hour time frame and the 1-hour time frame. And then the 1 hour has a snowball effect on the 15-minute and the 5-minute. So as you look at this, understanding that the bias and the structure rolls down. So no matter what time frame you're looking to trade, you need to have an understanding of what that higher time frame structure is and ensure that you're not trading against that higher time frame bias and structure. So let's go to the 4-hour and let's look at this. As we go here, and you'll see that the lines are still here. When I say structure, and this is a hard topic for me to discuss because it's a, what's the word I'm looking for? It's something that can't be fully defined, but you know it when you see it. So I know when structure is broke down, and I'll break down an example here, and we'll see that here, and hopefully that will illuminate it a little bit more. But I'm always looking for, when I'm in a trade, I'm looking for, if I'm in a long trade, like here on Dash, and I was on a long trade and I got out of it, I'll show you where I got out of it. If I'm in a long trade, I'm looking for structure to continue to hold. And I'm looking for changes in structure. And the second that I see structure breaking down, I'm not out of the trade, but I'm watching it a lot closely. And I'm saying, okay, when will there be confirmation that this structure is broke? The other thing I might do is I might take off a portion of my position once structure has broken, and then leave the remainder to see what will happen. More times than not, when structure is broken, it just doesn't come back, and it retraces down, and then it looks to create an additional structure. But let me dive into an example here with Dash. So Dash was in a downward bias. So as I was looking to trade Dash, I was looking for when is there a change in structure to the upside? When is the bias going to change where buyers are going to continue to step up and support any move down? So any move down is going to be stuffed, and it might not move up, but it's going to be very hard for Dash to move up or move down. Let me give an example. So I'll give an example so this is clear. Right here is the sign. It's actually right around here. That structure changed. So right here, the structure of Dash changed. Now the structure changed, if you would have got in here, which would have been before the structure change, was a 50% move or so. Even if you got in right where the structure changed, which is actually down here in a lower time frame, you would have still had a 30% move. Now, you would have probably been out where the structure, where I got out, and I'll explain why I got out based on the structure changing. But this move right here is the first sign that potentially the structure of Dash changed. The structure and the bias of Dash changed. And what happened after this move here? Let's go to a lower time frame, because this will be even more clear. So here, Dash was on a downtrend, clear bullish sign. At this point in time, it broke out above this level, and then here, it held. And then this move here, if this wasn't a sign right here, let me scroll in. If this wasn't a sign here that right here at this point in time that the structure had changed, then this should have been a sign right here. Because when you see a move like this from a bearish structure, so Dash was in a bearish structure. The market had a bias to the downside, meaning that every up move was being stuffed by sellers. Every up move was being stuffed by sellers. So if we see this, up move, stuffed by sellers. Up move, stuffed by sellers. And then really got stuffed down here. So here, same with here, this up move, stuffed by sellers. So there was a bear bias, a downward bias. Suddenly though, I don't care what the news was, I don't care anything, I don't follow news. You can just look at the chart and say that the bias of this asset changed here. Something changed here. Now, when you see a move like this, what you're looking for is, does the structure of this asset change? Meaning, are the sellers no longer in control? And are the buyers getting control of the market? And what proof would you have? How do you look and see how structure has changed to confirm that, let's say that you got into a long position here, and you're in a long position here on this move here. So you saw a breakout, you saw it pull back, and you saw that it gained support, so you got into a long position here. And now it's moving up, and you're wondering, as it moves up here, and let's use this. As it moves up here, you're looking for whether or not the bias has changed in the market and whether or not the structure has changed to a bull market. So what are you looking for? What you're looking for and what you're trying to understand, and this is where it's, I think that this is the true secret of trading well, is you're looking for, has the structure, has this move kept up its value, and has the structure and the dynamics of the market changed where the buyers are now in control? And how do you see that? Well, the first thing that you see that is price. So price rules everything. So this move up it went all the way up here, and then it retraced down, and it retraced down, but then it did stop. Now, one of the questions you should always be asking with structure and bias, and this is the other thing that I'll add to this, is you should always be asking, why did it stop there? Why did it stop here? 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 You should be always asking why it stops. I'm not saying you're going to get the answer, but you should be asking that. Why did it stop here? You're looking for clues for why it stopped here. But your first clue that, remember, the first clue that the structure of this asset changed was here. Your second clue that it held up is that the value from this move maintained. It didn't completely maintain, but this is a structure that shows that the buyers have maintained control of the market. Notice I'm not talking about any support and resistance. I'm not talking about anything else. When you add support and resistance, value channels, moving averages, maybe one other indicator to this, becomes even more powerful. But you can do this, you could just print out a chart every single day and look at a printout and get this same information. That's why structure and bias is important. So at this point in time, if you were in this trade, and if you didn't take profit here at 22%, and you're giving it room, you'd still be up at this point 10%. Now, as it hit support here, and the buyers continued to maintain control, you're looking for proof that the structure has maintained, that the buyers are continuing to maintain control, that the bias of the market, and this is a good example because you're going to see here where the bias of the market changed pretty quick. And this is why you really have to be on your toes with crypto to trade crypto. So the bias of the market is up. It changed right here. This is the sign. This is the continuation of the sign. And then what are we looking for? We're looking for higher highs, higher lows. So what is a higher high, higher low? Well, this low here, and if we start drawing lines here, this is going to start to get ugly here, but this is the best way to do it. Here's a low right there. Here's a new low, higher low. Here's a low, higher low. Now it did break there, but this is a close. Rejections are good, but it's always good to see an actual close. So you're really looking at closes. Typically, I would say, and this is something that took me a while to really put into my trade system. In certain markets, a lot of markets, you have to create rules. For crypto, one of the markets that I've created is that I don't make a decision until the candle closes. So the price isn't official until the candle closes. Now, obviously, if I'm watching something really closely at a lower time frame, then that candle close might be on a 5-minute time frame. But you don't make a decision on anything until the candle closes. So that's one of the rules that I have across all markets. Another thing, let's see here. So it moved up here. Here's a higher low. Now, this is the first sign that maybe structure had broken right here. Why? Because for the first time, it started to make an actual lower low. Here is a lower low. So it's starting to make lower lows. Now, this is where a lot of people would get out at this point in time. But this is where you have to then look at other time frames. And it depends on your type of trade, the type of trading that you're looking to do, and everything else like that. But as we look at this, let's look at the 4-hour. And let's see if our lower low holds up. And actually, on the 4-hour, if we look at this trade, it looks better, as here's a low, Let me remove all this. Here's the low here on the 4-hour time frame. And then this range right here is a higher low. Remember I said that the higher time frames steamroll the lower time frames. So at the 4-hour mark, this is a lower high. I should say a higher low. So the structure is not broke down yet. And this is close here where the structure maybe looked like it broke down from this move here where it found support, but it found support here. So now you're still in the trade. The structure, as far as the structure that the buyers maintain or are maintaining control of the market, and that the bias now is bullish, you see no reason that, based on price action alone, that this is wrong. As price continues to move up, let's go back to the 1 hour. Let's look at this. Your first sign, though, that maybe, and this is where you need to start looking at both sides of the trade, the upside and the downside, because it's not just lower lows. You need to start looking at higher highs. So here, this is where structure comes into play. Notice I'm not talking about any candle types. I'm not talking about any rejection. I'm not talking about any volume. I'm talking about the structure of the market. This is where I think a lot of people get lost because they get tied down on indicators. They get tied down on moving averages. They get tied down on reading volume, price action, different candle patterns, and everything else. When what guides all that, and those are important. I'm not saying they're important because they give you the ability to look at the clues that are happening around structure and bias. But what overrides all this is the structure and bias that's unfolding and the historical and the story aspect of what's unfolding in this asset. So as we look at this, I want you to keep that in mind. As you layer on the other things that I cover in detail in my training, the ability to read the structure and bias gives you an additional superpower is the way to look at it. But notice I haven't talked about that at all so far. I've only talked about, let's just talk about the structure of what's happening. So as we continue here, your first sign that maybe something was amiss was, this wasn't really a sign because it's a double test. It pulled back, but then it maintained a lower high, a higher low, I should say. And then here, it hit a high, and then it's still maintaining a higher low, but then it failed to maintain or failed to breach a higher high. And as it pulled back, it's making a lower low. This is the structure change right here. This is the change in structure. This is your first sign that, hey, I should pay attention. Because two things happened. It didn't make a higher high, and it made a lower low. That's your first sign that structure changed. And then you'll see what happened. It range traded for a while. It traded in this range for about a day and 12 hours. Yeah, it got below it, but it traded in this range. So if we go to the 4 hour, we look at that. We'll see on the 4 hour, this is the range. It's even more clear, or it should be. Hopefully it's more clear. Hopefully you're starting to see the power of structure and bias. What happened here? Who's getting control of the market in this range? In this range here, you could say. Who's getting control of the market? Is it the sellers or buyers? Well, we don't really know, but it looks to be the sellers. Based on, there's not every move is being picked up by the buyers, and the sellers seem to really be taking control of the market. There's one other thing that I'll mention here, and I'm probably not going to do it justice here, but the other important aspect to structure is how long these things take. This is a quick move. This surprised everybody. So this move here, as we start here, everybody was surprised. This took everybody by surprise. A lot of people by surprise. So now people are paying attention. So what are you looking for once this happens? It's holy crap. Look at Dash. It moved 15%. It actually moved more than that. So let's just say here. You know, people are saying, wow, Dash moved 24% in 10 hours. All right. So now people are paying attention. So this surprised everybody. So what are you looking for? This surprise, is their structure being maintained? Is their bias to the upside being maintained? Yes. Here. So if you didn't make this move, if you didn't get this move, and you see this, you're surprised, what are you thinking? Well, the first thing you're looking for is, okay, where do I look and how do I watch that structure is being maintained? And here's a sign where a huge rejection, and then if we go to a lower time frame, like the 15-minute, here, we scroll in here. Here you can see that structure changed here as well. So let's look at this. So higher high, got rejected, lower low, except this low here was maintained. Right here, this low here was maintained. So the second that you see this here, that this low looks like, and you wouldn't maybe necessarily add to your position or add a position right here on this candle because you need to see a close. But here, in this range here, is enough proof on a risk-reward aspect that the structure has been maintained. That this surprise move here that surprised everybody, this value and this structure and the structure of this asset is going to change. Now, how long is this structure and bias going to stay here? That's the question. How long? Who knows? That's where you don't know. You don't know how long this structure is going to stay intact. You don't know how much this move is going to be. But you want to be in this trade for as long as this bias and this structure remains intact. Because if you weren't trading this before, I was fortunate that I happened to be trading it down here. But if you weren't trading this before and you want to trade it here, you're looking for where's the structure. So here's the structure, maintaining of the structure. And now you're in this trade and you're looking for a continuation of this structure. Where did this structure break down? Here's the first sign. If we just keep a simple trend line on there, here, and keep this simple trend line here, and let's just say that this is a trend line, you might have been a little concerned here, but this is still a higher low right here. Still a higher low. Still a higher low. Here's your first sign that maybe it's a lower low right here, but then that was quickly, and this is maybe where you'd move your stop loss up. So this is how you would trade this. I'll just give an example. You'd trade this, you'd put your stop loss here, probably lower here, and then target, you know, way up here. And then as it moved up, and then as you see the structure break down, what would you do? Well, here, let's say you're here on this day here, you'd move your stop loss to maybe where it's very clear that the structure broke down, which would be here. So if it breaches this low and it doesn't get picked up at this low here that had a pretty big inflection point, then that's 2 times that the structure broke. But here, what followed up, and if you did a trailing stop loss, this is probably where you do a trailing stop loss, you'd be trailing this price up here. Now this is where you'd see that it actually did get a higher high, so you'd be expecting, and if we go to, this is where you'd have to go to another time frame here, once again, and look at these from different time frames. But this is where you're looking for has this structure broke down. If it wasn't clear from this range here, where it failed to get a higher high, and it failed to get a higher high here, and it was getting a lower low here, so here, lower low, lower low, lower high, there's the high, here's this high, it failed to reach that. And then what happened? Well, it eventually just broke down. And part of this is obviously a BTC move. But as you look and see here, if it wasn't clear from this point here that it broke down, this move here should have been clear. Because what are we now looking at? What happened? Well, right now, the sentiment, the actual structure and bias of this is no longer bullish. See, this is why where it really changed was right here in this range, is where it started to give you a clue. And then here was even more clues. And then here was even more clues. So you had plenty of time to figure it out. Here, that was 4 days. So in this range here, you had plenty of time to figure it out. 4 days. And if we look and see what is that range here, that's about a 6% range. So you had plenty of time to give it room. And let's say that you stayed in at this structure because it's still here. This is still a higher low. So even though it failed here, there's a low here and it held up that low. So here you'd probably still be in, but as it started to make lower lows and it failed to make this higher high here, this is here, and this low in this range, this is another clue. Remember what I said just a little bit ago where I said that it's also the amount of time. And this is where I see that I'm 37 minutes into this video, but if we add moving averages, if we add actual value channels and other things, this gives you even more of a trading edge. When you add the other things that I have in my trade system that I share in my training, it gives you even more of an edge. And I want to share the structure and bias of this, because when you can read a chart this way, when this is the way to read the chart, and then you layer on everything else. You layer on candle reading. You layer on indicators. You layer on volume reading. You layer on value channels. You layer on these things and chart patterns. But what comes before all those layers is the structure and bias. So right now, if I'm going to enter Dash, I'm going short until the market proves me otherwise. I'm not going long in this. So if I see a move here and it moves up to here. So if Dash right now from this point moves up to here and moves up to this range, I'm going to go short. I would go short here. Because the bias, and this is the biggest challenge I think people have with crypto, is that this bias changed way back here. So the bias changed way back here, and the bias is not going to change, usually is not going to change on a dime like this. It's just not. Now, this is where you'd have to look at higher time frames. So this is where, once again, you have to argue with yourself consistently. I think the other thing that traders don't do, that they need to start doing if you're not doing, is you should never be convincing yourself to do a trade. You should be always arguing against doing a trade and arguing consistently to stay in a trade. You should always look for the argument. You're looking for prove to me that this is worth my capital. Prove to me that I should risk my capital on Dash. So you're always looking for the argument. So there might be a actual turnaround here on Dash, but unless it's a strong move, I've seen the sentiment change here. And part of this is just looking at how long you'll see here. The move up here was 5 bars in 20 hours, I think. Yeah, 5 bars in 20 hours. This move here, 7 bars in 1 day. But then it took 3 days to retrace down. That's because the market participants, most people aren't reading structure and bias. Most people haven't realized that it's going to retrace until it's right about here. Most people haven't realized that yet. Most people are buying this break too. They're buying this. So here's the thing. Most people are not reading structure. And most people, this is the thing about crypto. Crypto does not have a high enough utility. Now something like Dash does, and we'll show another chart here because it'll be just very clear. But Dash, because it's a currency and it has uses outside of just what it is, has a different market profile than something like, and let's look at chat. So let's just move here, BTC. So let's look at chat. I know that moved recently. So this is another good case study. So if we go to the daily here, this is why trading crypto is very hard without a very clear and concise trading plan that gives you an edge. That's why I use value channels. That's why I use very little indicators. I'm trading off value channels. I'm trading off moving averages, and I'm trading off structure and bias. And then candles and volume, I'm trading off that because that's all you need. That's the market reveals all this stuff to you. Here's where we look at chat. This is why this is a prime example why trading crypto is tough, because look at the bias there, but then look at how quickly it changed. So here's the bias. Now the question you should be asking is this bias going to continue? I don't think it will continue much longer, but it might continue for another day or two. So you might have another 20% move in here potentially that you could get with chat, and it could get exuberant here. But you have to look at something like this and you have to understand, if you're going to trade chat, where's the first sign that the bias changed, that the structure of the market changed? And I'm asking you, like, you can say, hey, there, right here. That's the first sign, right? Holy crap. Something changed. All right. So that surprised everybody. 26, about a 30% move. You could go from here. So this is the holy crap move. So if you wanted to trade this, what are you looking for? Well, the bias potentially changed. The structure of this market changed. Well, remember, these are 4-hour time frames that you're looking here. I want proof that the market structure has changed. Where's the proof? The proof didn't come here. I mean, it did kind of come here, but then it was instantly broke. So then the proof came here. This is the proof that the market structure had changed, that it continued to hold this line. This is where it does get difficult, because this is why trading crypto, you have to switch your mind to a quicker volatility, because crypto has a quicker volatility. Crypto changes on a dime because it's a very emotional market. The good thing is that you can trade crypto moving over to something like oil, like here. Like, I'll just show you just some examples. Here's all my recent trades on oil. So there's a short that did really well. This short here. Here's a long, did pretty well. I actually got out way too early on that long. But I saw a structure breakdown here. Plus it was end of day for me. Here's a short. So I'm currently in a short right now, and I'm looking for structure to continue. And it looks like structure is going to, it's hard to say. There might be one more move up to this value channel here, but then I'm going to be watching this range here for structure. So right now, I have a bear bias on WTI oil right now. So I have a bear bias on the short term. And if we go to the 4-hour, I still have a bear bias. but now I'm looking for proof that structure's actually maintaining. There's a little bit of proof here that this is not going to be, that this is potentially a higher low right here. So overall, the 4 hour, the bias here is up. So see, this is how it is difficult in any market. The overall, I have the overall bias and structure of this market right now is in a bullish move overall on a longer term trend. I'm trading a short term trend of a bearish move, and I'm waiting for structure to break down here, right around here, to prove to me that I should be out of this short. So this is why, once again, you're seeing the full picture. You're seeing value channels here. You're seeing some moving averages, some other things. But this is how structure plays a role in any market. Now, if we go back to chat, because I don't want to leave you hanging on that. Now, as we make our way back to chat, one thing I do want to mention is that, remember, this is a surprise right here. Now, there was clues before that. So I'm intentionally making the structure changes and the bias changes very obvious, because if you haven't looked at the market in this way, or you're not looking at the market in this way, I need to give you examples where it's very clear. I don't want to give you just minute examples. So this is very clear. This sticks out. The human mind is able to see this as something that is unique in this chart right here, because it's so big. But as you get better at structure and bias, what you're looking for, and this is where a lot of my training and my trade system comes into play, your ultimate clue was, your best clue here, especially if you're watching this very closely, is here, is in this range here. So there was higher highs. And if we go to the 2 hour time frame, which is one of my favorite time frames for looking at this type of stuff, you're getting a couple clues that my favorite trading in crypto is when supply dries up. And if we scroll in here, it's hard to see, but here's clear signs right here that supply has dried up. And in conjunction with supply drying up, there is a higher low. So there's another good pattern that I like to see, which is sometimes called the railroad tracks, which is this pattern right here. So, which is a strong down move and then a huge rejection, but it's a measured move equally there. And keep in mind, these are 2 hour time frames. So, and then that value is maintained. So this whole value is at least half of this railroad track value right here is maintained. So see that? It's maintained, meaning that it's never closed half of that value. It did get rejected there, which is a good sign as well. But then it's continuing to make higher lows. Now they're matched. So I would have entered a trade, given my trading style, I would have entered probably right here with a stop loss down here, 10%. And then I'd be looking for at least, I would have put it up at 30%. I like to, a lot of my swings, especially on chat, link, what's another one, yo-yo. There's a couple of these charts that I look for 30% moves. So I really look at the daily chart, and what I'm doing is I'm looking for structure change. I'm always looking for structure and change. And then what I'm doing is then I'm looking to buy as low as I possibly can, maybe just do a little nibble, and then I'm looking for a 30% move. And if I can then, now that I'm in it and I get a 30% move, then sometimes I do actually do the pullback as well, and then play this pullback because I'm paying attention. Usually I'll take profit because I like to take profit at 30% plus, and then maybe buy the pullback. I don't like to stay in. It grinds me, even though what I will do is I'll move up my stop loss here. So this is my trading style. So this is another important conversation, is understanding your temperament and the way you trade and who you are is so important to trading. I can do videos like this and share with you fundamentals and even in my training, just train you on fundamentals, but it still comes down to you understanding your temperament. My temperament is this, that if I enter down here and I'm up 30% and let's say I'm up 38%, 39%, and I entered down here, I can't handle losing 15% on that. So sometimes I do take a little off. Sometimes I just completely get out because I'm able to trade full time because that's what I do, that I'm watching the market. So then I can potentially then rebuy on a pullback. But my temperament is I just don't have the patience to let it go down here, continue to watch structure. Even though I'm still watching it, I would prefer to take profit up here and then prefer to re-enter a trade here with the same risk reward and then let it continue to play out. So that's just my temperament. I like to take profit. But the right way to do this, and this is one thing I'm working on. I'm actually better in other markets like forex than crypto for some reason. But I think the main reason for that, and I'll just share this, is that crypto has BTC. And if we add, you'll know on my charts I have BTC except for this one because it's just a raw chart. But BTC, when it dumps, obviously the alts dump. Well, in other markets like oil and gold and everything else and forex, there's other news and other drivers that make that happen. But it's not this giant monolith of BTC that you could see a really good trade setup. Like the sentiment and the structure and bias of this asset could still be bullish, but BTC could take a 4% dive and then this is going to go down as well. Even though sometimes it's contrary to that, sometimes it does continue up. So like right now, if we look at BTC, here's a move today. This is today for BTC. So it took a 7% move or so, and it's looking like it's trying to fight back at some level. Well, what happened with chat today? We go to the daily. Chat, it did retrace down, but it's one of the few things that's actually up. If we look across the market, across the crypto market, everything's down. And some things are down double digits, some things down to the 20% mark. So good opportunity to start looking for structure changes. But those structure changes were a direct result of this move down here on BTC. If Bitcoin would have continued to trade in this channel or moved above here at 7,500, then you would see in most alts that their structure would have been maintained. So that's the other thing that makes trading crypto a little bit more difficult than other markets. Still a huge opportunity, still a great thing to trade. Still, like I said, it's still a huge opportunity in crypto to trade. So I just share that because my original point that I started with here is that early on, I'm sharing the various obvious examples of structure change because this is very obvious. But as you get better at structure changes, as you get better at reading structure changes, as you start using value channels and other things, you'll start looking for structure changes around value channels and structure changes that are smaller with other clues attached to them. And then that will give you even better opportunities where you'll enter down here. Instead of waiting for the move where everybody's surprised, you actually saw some early signs of potential accumulation, potential surprise, and maybe you entered a smaller position here. And then maybe as structure continued to hold up here or continue to hold up here, you entered a trade. That's key. Now, one thing I'll say is this is a good example of where structure sometimes can be, you got to be patient. Because what happened here on chat? Well, I most likely would have entered a trade probably here once structure stayed up here. And then my first sign though, and this is a good example, your first sign that this structure was about to break down was here, where here this level held up. So that's a good sign, but it was really close. So you probably were watching it pretty close, especially if you entered here. So, but it held up. But then the second that it failed to get near this high right here is where you're starting to say, okay, maybe the structure broke down. And then you're watching it. Now, most likely what you would do is you'd either probably move up your stop loss to right about break even, or you would have done a trailing stop on this, and then here you'd still have a trailing stop, and then you'd get an exit on this candle right here for a small gain. But then you'd be watching it and you'd say, okay, great, that was a good trade because structure did break down eventually. There's a lower low. And then you're watching it as well because what are you watching for? Well, this move here that surprised everybody, is that value going to hold up? And the value did hold up. What do we see here? It held up here. Where's the next sign that the value held up? Well, if it wasn't here, as price continued to move, you're starting to see that value is holding up. So that's worth a trade in my trade system. Right here is worth a trade because that risk reward is awesome. Because your risk reward is right here. You've got another inflection point. If you want to go a little bit more aggressive, you go below this inflection point here. I have a video in my training on inflection points. You go below this inflection point, you're below this low here. So you have a chance here if it breaks down this low and it goes below here and it doesn't find support at this inflection point, then you could get out and still be well within your stop loss. There would have been a 5%. But your upside, even if it just retests here, retest this structure here, so it looks to retest this and gets rejected, which it did, that's a 17% move. That's a pretty good risk reward right there. It should be better, but it's a risk reward of 2. So I would prefer something higher, and that's what you got. But see, as it moved up here and new structure was formed, as it made a higher low here, maybe you would move your stop loss up here to here. So you're already in profit. So you're in profit. So now you just have a trailing stop. And then if this structure was broke here, right here, then you'd be out at a small gain. But then what happened? Well, it continued to move up. What do you do there? Okay, well, there's structure here. This is where you just look at this and you say, well, how aggressive do I want to be? Well, here's a new structure right here. Right here. And it broke that structure. But then do I look at this as structure? And then you go to another time frame potentially. And say, well, if I'm trading off the 4 hour, and then this is where it becomes a little bit more difficult when you look at structure because it hasn't retraced at all. So this is where you have to look at structure and you have to really understand the strength. And this is where looking at lower time frames will help you. See, oftentimes I've heard this saying that winning trades take care of themselves. That is, in my experience, completely a false statement. Winning trades do not take care of themselves. Winning trades, they're not even easier to manage. They're winning trades you have to manage just like any other trade because you're looking to maximize your profit. And you need to have a trade system that is able to identify those correctly. So as we go here and look at this here unfold, let's say that we're on this 4 hour time frame. Well, you're expecting, well, first you're probably looking at support and resistance and value channels. So I'm intentionally hindering myself here, but there is a previous range here that was just broke right here. So you'd be watching this range and saying, well, my expectation based on simple support and resistance, even though I can't wait to get to this video, support and resistance is great, but structure is the right way to look at it. Structure and bias. If put it this way, what's the nice way for me to say this? If support and resistance actually worked, everybody knows about support and resistance that trades. So everybody should be a successful trader, but not everybody is. So why is that? That's because support and resistance really doesn't work. That's the that's something I realized early on, that more often than not, support and resistance is a detriment to your trading. But it's important to understand because it is inflection points on where other traders are looking to trade. But the professional traders, they are trading at these support and resistance points because they're trading into strength, or they're selling or buying into strength, because they know that's where the retail trader is liable to be. But they're always being mindful of, they've got to watch themselves to where the professional traders are as well. So it's a cat and mouse game. I'm derailing the video a little bit, but so keep that in mind. So when you're looking at the chart here, as we would be here, we'd be waiting for a retracement. And this is where structure in real time becomes a little bit more of a challenge, of course. Because at this point in time, what are we looking for? Well, at this point in time, we're looking for how far does it need to retrace for me to either stay in this trade, or do I want to get out, or when will a new structure be created? Right now, I would say the bias in this market is still on the bull side. The buyers are still in control. Now, as we go to the right, okay, we're getting a retrace. We expect that. That's going to happen. Well, this is good. This is a kind of a railroad track looking type of retrace on the 4 hour. Let's look at here. All right. Well, obviously the sellers have stepped up and people are taking profits. So that's a sign. The question is, now we're wondering, is this the new structure? And how far is it going to go? Now we know that this is people look at this and say that this was a resistance, so this is going to become future support, and it looks like it has. All right? And it had. So that's good. So the market is telling us that, okay, this is the lower low that we need to watch now. This is the lower low. Now this high has not been breached. This high has been rejected. Let's see what happens next. Still being rejected. This might be our first sign that structure is breaking down. Let's continue. So as we go down, still indecision in the market. Still, and this is something that I think is a hard, right now, this looks bad. And I'm not saying it's not bad. There's rejection to the upside, a tight trading range in 2 4-hour time frames. And this is where structure and bias and being able to take yourself out of the current moment and looking at the overall story of what's happening with this asset and the structure of this asset will help. Because right now, I shouldn't do anything because the structure is still intact. I know it's starting to look like it's not good, but the structure is still intact. There's no proof yet that the structure, this upward bias in this structure, has broken down. And I know that this is the hardest thing for a lot of people, is that, of course, you could take profit right here and be okay. So I'm not saying it's not. So but really, what are we looking for here? Well, for this to completely break down and for structure to break down here, this 4-hour time frame needs to make a lower low than this. Now it's on its path to. We've seen rejection 2 hours in a row to the upside, and then there's indecision right now, and this is where you go to lower time frames. And this is where, obviously, if you're in this trade, you're making. Another thing I'll add here is your trade decisions need to be binary. So I'll do another video on this sometime, but all trade decisions should be binary. Do I stay or do I get out? And if I stay, at what point do I reevaluate? So right now, the binary decision here is, do I stay in the trade or do I get out of the trade? Well, I'm in the trade still, because, and it depends which low you want to look at. Do we look at this low here? It already breached that, but then it actually went above it. Or do we look at this low here? Which low do we look at? So that's your binary decision. Well, let's say that we choose this low here. So if it breaks this low and it doesn't get rejected and it closes below this low, then we're saying that the structure has been broke. But so far, if we look at this here, this high here, it has closed above it. So there's still an opportunity for it to continue up and to continue up here and potentially make a higher high. And because this will be the lower low right here, to make maybe a lower low right here, potentially. So this is where the real-time aspect of this, of what you're doing, and this is why it really does help to, and now it's hard because when you're in a position, so I'm in a position right now, I'm in two positions, one in two forex positions, and so far I'm one of them I'm up quite a bit, but I'm staying in because the structure still looks intact for the upside. Let me go to that chart just instead of talking about it. Let's go to this chart here. So here, I bought here, and I'm still in this trade. Here, I don't know the exact, but I should have cashed out here, most likely. But I'm making this a longer term swing. But here, I entered right around here. So I'm up, whatever that is here, on this forex pair here. And for me, I was looking at, you'll notice, and this is actually a good real world example as well of a potential change in sentiment, structure, and bias. So you'll see value channels on here as well. So there's a value channel, here's a value channel, here's a 50% value channel. And that was actually my sign that structure changed here for me to enter here, is when it actually broke through this value channel here and then maintained above it. So going into this trade, I had a bearish bias. But as these days were unfolding, as it was 1 day, 2 day, there's this day, 3 days, 4 days, 4 down days, I was looking for potentially a change in sentiment, a change in structure. And you'll notice that it's trading below all these moving averages here. All these moving averages, you see these? It's trading below that. And it's bouncing off some of these moving averages. Here it started going above it. That was my inclination to start paying attention. That, hey, maybe structure is changing. So then I'm looking for, I want the best price possible. But I want the best price possible after I kind of see a structure change around a key value channel area, which is here, and a couple other things align, and that's where I entered here. So I entered here, and then it just moved. Now, part of this is that I knew there was news coming out, but this just moved here in my favor, and I was really tempted to get out up here. That would have been a nice move. But what I was looking for is it bounced off the 75% level of this value channel, which now, what am I looking for sentiment? Where did my arrow go? Thought I had an arrow here. I'm looking for, did this value maintain? And at what point did this value maintain? So for me, the value maintained at this value channel area right here. If it closes above that value channel area and starts trading above moving averages. So see all these moving averages? It's trading above those. And it closed above those. And it closed above my value channel line. That's this red line right here. So I have no reason to get out of this trade yet. I'm still, so I'm not as up as much as I have here. What am I targeting? I'm targeting up here. So I'm targeting up here. And if it breaks through this value channel right here with strength, then I'm targeting the next value channel. And why? Because potentially this is the change of sentiment. I say sentiment, structure. I use sentiment, structure, and bias. So this is the change in structure, meaning that this might be the point where the bias has changed to the bull side. And maybe I caught it almost at the bottom. And then I'm looking for clues that the structure of the market is remaining bullish, that buyers are continuing to step up every downtrend, that there's higher lows, that even on a smaller time scale, there's higher highs. So I mentioned that just to give you another example of another market, of a trade that I'm in. But, and I'll just share, as a trader, I look at this profit here, and I did, this is what's, I can't say painful. I watched this whole, this is why it's tough for me. I should either change my trading system a little bit, but part of this is just one of the things that I found extremely helpful is that I have a daily report card, and on my daily report card, I have one thing a month that I want to get better at, and my one thing this month is staying in trades when the structure is still intact, and building that skill, and then sizing up. So as either I would add to the trade here, or I would do increased sizes as I was right, as it continued to go up and structure stayed intact. That's one of the things that I'm working on as a trader. And it's hard for me in real time to watch it go up here and then go all the way down here, and then kind of find a new structure, and then just kind of sit there for a while, and then maybe come back down here and then go back up. It's just, it's, even though I understand it fundamentally and I get it, sitting here and being in a position and watching it unfold, and not the challenge, the good thing about this, and I'll just share this from my own personal experience, hopefully you can get something from this, is that your risk reward goes up when you enter here, where your risk reward is already defined here, and as long as the structure stays intact, there's no reason to get out of the trade. I mean, yes, you can have a target, but as long as the structure remains intact, you should stay in that trade. If I enter the trade here, I have to do two things. If I'm doing the same position size here, I have to feel that the structure is strong enough that I should do the same position size, and my risk reward has to be the same. The other thing that I have to really do is I have to say that this move, this move is going to maintain, and it might just move up here and break down. And then that might be the end of the move. That might be the breakdown. But that's, I'm risking my capital twice. It doesn't make sense. Put it this way. It doesn't make sense usually to do the same risk reward on a trade that's in this range, what we see right here, as it does down here. Now, it depends on your trade system, but typically it doesn't make sense, because there's still this is still an indecision point. So we still don't know. So I'm getting a little more advanced, but this video is a little bit longer than I anticipated. But as usual, I want to try to cover a concept in detail. I already realize I'm probably going to have to do a version or number 2 or step 2 or video 2 of this, because I didn't mention a lot of things to cover this. This, to me, structure and bias, these two things, in conjunction with everything that I have in my training, is the true secret to having a trade system that gives you an edge, because it gives you the confidence to read the market correctly. And you're not going to read it correctly all the time. You're going to be wrong. But you're going to be more right than you are wrong when you're reading structure and bias. Because structure and bias, I hate using the term "the trend is your friend," but it's like anything else. If you push something that has momentum, and that's the way the market works. It works with momentum. But in some things, momentum can change on a dime. In crypto, momentum can change on a dime. In forex, it can be news that can change on a dime. On other things, momentum can change on a dime. So it's just understanding what you're trading and ensuring that you're looking at the sentiment and the bias of that market accordingly. And even, this is the other thing, even things within the same class, the same asset class. So when you look at crypto, chat has a separate structure and bias profile than something like yo-yo. So we'll look at yo-yo. And this should be obvious, but this has a separate sentiment and bias. If we go to the daily chart, you can just see initially there is a huge difference. There's a lot more opportunities to swing this. You can see here, if you can spot these structure changes, there's a lot of trading opportunities here for yo-yo. If we go to ZRX, for instance, same type of thing. If you can spot structure and bias changes, there's a lot of opportunity here. A lot of swing change opportunities or swing trade opportunities. There's a 45% move, 46% move, 20% move, 20% move, 15% move. There might be another move happening right here. Potentially be down here, potentially more. And then maybe another 30 to 40% move. So if you can spot the structure and bias changes in conjunction with all the other stuff, and it sounds like a lot, but it really isn't. You'll notice if we go to my chart here, I have moving averages. I have the MTPC, which actually the true range is actually one of the most powerful indicators you can have because it shows you the day trading. So this green here. And then I have the TDI and then the CRSI. Those are the only indicators I have. And these, and I'll do a separate video so I won't make this too long, but these are just reinforcement of structure. I'm just looking for these for reinforcement of structure. Now, let me show you this MTPC. So if you go to ZRX, why I like this is if we go to the 4-hour time frame indicator, structure and bias, MTPC, so multi-time period charts, and then click on this. What this will do is it'll show you the day time frame in these boxes. So you can see that this is a day trading range, this is a day trading range. And what you'll notice about structure and bias is that structure and bias, support and resistance and everything else correlate nicely to the day trading ranges, the highs and the lows, the opens and the closes. So seeing the daily trading ranges and understanding that and the movement of those will help you identify structure better, will help you identify bias better. You'll also be able to see here at just a glance that typically on this type of thing, the structure of ZRX is that it goes down maybe this much, 3 days in a row, and then it has a retrace, 2 days, then a retrace, 4 days, then a retrace. But you can kind of see just at a glance the structure of hey, it goes down a couple days, but it doesn't go straight down, and then it has bounced back. So this just gives you a additional visual cue of the daily structure of these trading. The other thing is you go to the 1-hour time frame, you get the same type of thing. So if there's one of the indicators that I would add, it's this, because it really gives you a visual cue of the daily trading ranges. And you'll notice more times than not, if we start drawing lines on here, here's a low of a day, and notice how this day here bounced off that low for a little bit of a swing or scalp. That's not bad. Actually, it's a pretty nice scalp if you notice the structure, an 8% scalp. and it actually continued further to like 9-10%. But you'll notice how a lot of these days, these trading days, they will align real close. So this range here aligns really nice with these days. So just having that additional indicator is a really helpful thing for identifying structure and day trading ranges. So it's definitely a indicator that I would suggest to use. Well, that's this video went in a little bit different direction than I anticipated, and a lot longer than I anticipated as well. I did not get to some of the moving averages and other stuff, but one thing that I will mention is that in my training, because I have all the foundational stuff of value channels, volume, candles, indicators, other stuff, what we'll be diving into is how to overlay structure and bias on top of all of that, and then creating a trading system around that. So I already have quite a bit of that, but then I'll be really adding some higher level concepts to this. So I'm really excited to get to that. I do hope that this video give you some insight in looking at the market in the best way possible. I think that this is the true secret to having an edge on the market. I'll mention down below in the description, you'll see links to the Discord group. You can ask questions. I share trades. I share quite a bit of information on crypto, what I'm trading. You also see links to tools that I use, so definitely check those out as well. And leave a comment and subscribe here. I look forward to seeing you in the next video.